Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. In an exclusive interview with Iraq's Prime Minister Mohamed Shia Al-Sudani, he tells me of the ambitions he has for Iraq's economy, oil production, as well as the geopolitical challenges in the region. As Wall Street gears up for this week's Federal Reserve decision, traders seem split on how big the Fed's rate cut might be. And Aramco is set to build a giant data center in Saudi Arabia as the kingdom seeks to become a hub for companies running AI systems across the Middle East, Africa, and India. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. We are going to give you lots of highlights from my exclusive sit-down with the Iraqi Prime Minister throughout the course of this show. But of course, as markets are concerned, the major focus for this week is still going to be that Fed meeting. And what we had yesterday was somewhat of a choppy session for the S&P. Managed to eke out some gains as we get closer and closer to all-time record highs. By the way, equal-weighted S&P actually is at a record high right now. If you look at the futures today, though, we are slipping somewhat marginally. We're down about 0.1% as we are seeing a risk-off session and a handover from some of these Asian equities. We'll talk more about that shortly. A lot of focus on the front end of the U.S. curve. No surprise, of course, as the market continues to be split on whether the Fed are going to go 25 or 50. But just in the last couple of days, we're leaning towards more of a 50 basis point cut. We've now got about 42 basis points priced in. So it certainly does tell you that investors just in the last couple of sessions have become a lot more dovish about what is going to come out of the Fed. Also worth noting, let's just take a step back. Back in April of this year, these two-year treasuries were trading at a 5% handle. We've moved a very long way in the last couple of months. USD also sitting at the lowest level since January of this year, so lots of downward pressure continues to be exerted on the greenback. Particularly, we're monitoring what's going on with dollar-yen. Yesterday, throughout the course of the show, we broke through 140 for the first time since 2023. So again, key for anyone looking at that part of the world. And then Brent, we are seeing some support come through this morning. We're up about 0.5% as we continue to talk about supply disruptions coming through from Libya. Let's switch over, though, because there is one important data point that the Fed have to think about before the meeting tomorrow, and that is retail sales. That's coming out later today. And actually, the picture for retail sales up until now has been quite positive. Those are those blue bars, the yellow lines. These retail sales control group, which essentially is a gauge for discretionary spending, continues to rise at a very strong pace. So let's see what the numbers bring today. But as of yet, the U.S. consumer seems to be holding up, which suggests that maybe the Fed will be successful at engineering that soft landing. Okay, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Still quite a few holidays in Asia, but tell us about the markets that are open.
Yeah, we still have South Korea, Taiwan, China market shut. Japan is back online today, and traders are getting their first chance to react to the yen strength. You talked about it just a short while ago, how dollar-yen break through that key psychological 140 level. And today you're seeing the export-related names, your chip stocks that are grappling with the rally in the Japanese currency. And this is also interesting to point out that the domestic demand-oriented stocks, like your retailers, they are the ones that are gaining some ground, helping to cap declines of about 2% on both the Nikkei and the Topix. A bit of gains elsewhere in the region as we keep an eye on the Federal Reserve kicking off its rate easing cycle this week. But also keep in mind how when we look at the moves in dollar-yen, it is not just something for equities investors to contend with. Policymakers also might not be enjoying their volatility. Jumana.
Yeah, absolutely. Always keeping an eye on the impact the Fed rate cuts is going to have on other currencies around the world. Avril Hong in Singapore. But first, this morning, my exclusive conversation with Iraq's Prime Minister Mohamed Shia Al-Sudani. I sat down with him in Baghdad for a wide-ranging discussion on the nation's economy, oil production, and the region's geopolitical challenges. In this first part of our interview, he told me the time has come for U.S. troops to withdraw from Iraq as the nation moves away from the coalition arrangement to bilateral agreements with other countries.
My government started a government-run program that was proposed to Parliament and put to a vote after the ministerial cabinet presented it. This was according to the constitutional measures. Part of the ministerial program was ending the coalition's mission after the justifications for its presence had ended, Today, Iraq in 2024 is not the same as Iraq of 2014. We have defeated Daesh with our sacrifices and the Iraqi people's position from all of its components and factions, and with the support of the international community and friends, and we do appreciate that. We found that the justifications ended, and there is no longer a need for a coalition of 86 countries. We moved from a period of wars to a period of stability. Daesh doesn't pose a threat to the state. It may be part of the security challenges like drug trade and criminal offenses. It's at that level. It's not equal to Daesh now, a group of terrified people hiding in caves, in the desert, in the mountains, and a real threat to security and stability. Based on this vision and evaluation, we initiated a conversation with our friends in the international coalition, and it was honest and included more discussions on various levels, and was culminated with my visit to Washington, D.C., and talking to President Biden. We formed a joint committee in August of 2023 between military commanders to start the conversation, and in fact, the committee reached an understanding to arrange for that withdrawal. It was hoped that the conclusion would be announced, but out of our keenness not to mix things or create a misunderstanding about the end of the coalition's mission, the desire was to postpone the announcement, and we hope to announce it soon. And we will take part in an international conference for the coalition against Daesh or terrorism, and Iraq is a genuine member that lead the ranks to face terrorism. Ending the coalition's mission, and this is an important point, does not mean a breakdown between Iraq and the coalition countries, including the United States. On the contrary, at the same time, we are in bilateral talks to build a sustainable security relationship other than the economic, cultural, and scientific and social ties.
You say that ISIS is less of a threat, and yet on Friday, CENTCOM announced that a raid was conducted in western Iraq. U.S. military, alongside Iraqi security officials, killed some senior ISIS commanders. That tells me that the ISIS threat is still there.
Of course, this was one of the quality operations that was executed between security agencies and the international coalition. This is proof that Daesh, or this is proof that the security agencies have reached a phase of capability where they started finding these people in caves, in mountains, in deserted areas, and kill them. This is proof of the level of ability and capability that our security forces have reached. Daesh today doesn't own a land or an area to be in and has lost its incubator, and this is the fundamental win achieved. Following up on the cells of these individuals doesn't mean that there is a real threat. When we used to talk about Daesh, Daesh used to hold areas, villages, and cities. And today, Daesh doesn't have this existence except for these isolated groupings in deserted areas.
There's a U.S. presidential election coming up very soon. What would you like to see out of the next U.S. president, be it President Harris or President Trump?
Of course, we respect the choice of the American people according to the democratic process. We will deal with any administration that gains confidence. It's of interest to us to activate the strategic framework that was signed in 2008 and building a relationship based on these principles of mutual interests and respecting Iraqi sovereignty.
President Trump has been historically very hawkish on Iran. Do you worry that a return of President Trump could be even more destabilizing for the region?
Our understanding of the situation of the relationship between Iraq and Iran is based on mutual interests and mutual respect. Iran is a neighboring country, and we share 1,400 kilometers, and it's in our interest to have a close relationship, especially that Iran has been supportive of the political process and our efforts in combating terrorism. Of course, Iraq is the only country in the region that has a special relationship between Iran and the United States, and we try through this positive characteristic to help in bringing opinions closer, and we are interested to have stability in the region, away from the Axis policy. We don't want the tense relationships and the stances of other countries of the world to impact the Iraqi situation. This is our diplomatic effort and movement in terms of our bilateral and regional ties.
Well, that was part of my exclusive interview with the Iraqi Prime Minister Mohamed Shia Al-Sudani. Now, later in the show, we will be hearing more about the nation's economy and oil production. A lot of focus on what Iraq has been doing there, especially as they are the second largest producer in OPEC. Now, for a look at some of the other stories we're following. U.S. Secretary of State Antony Blinken is planning to make his 10th trip to the Middle East since the Israel-Hamas war began almost a year ago. The White House says the U.S.'s top diplomat is set to fly to Cairo to discuss the negotiations for a ceasefire in Gaza and broader regional security issues. It does not appear that Blinken will travel to Israel on this visit. It comes as the Biden administration continues efforts to revive the stalled ceasefire talks as the U.S. elections approach. Israeli markets weakened after widespread reports in local media suggesting Prime Minister Benjamin Netanyahu is considering firing his defense minister, Yoav Gallant. Reports added Netanyahu is in talks to replace him with Gideon Sa'ar, an opposition lawmaker. Netanyahu's office later put out a statement denying he was involved in the negotiations with Sa'ar, but did not refer to Gallant. Gallant has repeatedly criticized Netanyahu for not accepting a ceasefire deal with Hamas. He was the only member of the 10-person security cabinet to vote against the policy to maintain IDF presence in Gaza's so-called Philadelphia corridor. And up next, Magellan Capital's head of Long-Short Equities tells us why she thinks there's room for lower rates across the world. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, not since the lead up to the financial crisis have bond traders been so divided about the next Fed decision. Whether policymakers will cut rates by a quarter point or a half point is still a toss-up in the rate markets. Bloomberg opinion columnist and former New York Fed President Bill Dudley says there is scope for a half-point rate cut.
The market has come to the view that 50 basis points at this meeting is, in fact, appropriate. It's pretty important that the Fed head back to neutral expeditiously, and that 25 basis points wasn't fast enough.
But PIMCO is betting on a quarter-point rate cut. The CEO, Emmanuel Roman, told Surveillance that he sees the start of the easing cycle that is paving the way for a buoyant period in fixed income.
We're in the camp of 25, but, you know, I always say we have a crystal ball, and at the end of the day, we'll see what the market does. You know, it may very well be that it doesn't make that much of a difference. There will be 3 cuts of 25. And at the end of the day, what matters is where we are at the end of the year. The total sum of the rate cuts may matter more than how they do it.
So we've got a 50 and a 25, and now politicians, 3 Democratic senators have urged the Fed to aggressively cut the benchmark rate by, listen to this, as much as 75 basis points this week. They say if the Fed is too cautious, it would needlessly risk our economy heading towards a recession. Okay, so many different views here. Let's bring in Britney Lam, head of Long-Short Equities at Magellan Capital. It is quite something that we are so close to the Fed's first interest rate cut in years, and yet the market still doesn't know what they're going to be doing. Should they have telegraphed this better?
I think they telegraphed it way too much, as there's so much different ideas floating around. I think the base case is 25. which is normal as the Fed tends not to cut ahead of U.S. elections, which is coming in November.
But if you think the base case is 25, why is the market pricing in 43 basis points? The market has completely shifted towards the 50 camp the last couple of days.
I actually think it should be 50.
Yeah.
You ask me, that's the right thing to do, so they're not behind the curve. Because the key thing that has deteriorated has really been the labor market numbers.
Yeah, what about the signaling that sends? If they do decide to cut 50, are they not explicitly saying, well, implicitly in this case, that they're really worried about the state of the economy and therefore the path to neutral could be a lot faster than what people are pricing in? That's worrisome.
I think near term you may have a solve from risky assets, but it's better to take the pain now for the long-term sustainability of the economy, because we are heading in towards a late cycle. So when you have private payrolls falling below 100,000 on a 3-month rolling basis, that is a more real reflection of true demand than GDP number.
Yeah, I don't know. I mean, I just look at all of the numbers holistically. I understand some of the rationale for why people are saying they need to cut 50 because real rates are still quite restrictive, and yet broadly speaking, the numbers are still holding up. We've got retail sales coming up later today. U.S. consumers have still been holding up as well. And even though we're seeing some weakness in the labor market, again, at this point, it's nothing to be massively concerned about. Jobs are still being created.
I think that's the issue, because labor market is the first reflection in terms of a leading indicator. Then subsequently, you'll see slowdown in retail and potentials.
Yeah.
So I think the first is labor that we should watch out for. Second is really the marking of what has sustained a rally so far.
Yeah.
So S&P has been up 18% year to date.
Yeah.
What I think has sustained it is what I call the super fiscal spend cycle.
Oh, that's interesting.
Yeah, so that includes the IRA, the CHIPS Act, and all of that actually momentum has turned negative in second quarter this year.
Well, I was going to ask you about that. So what we have seen in the past couple of weeks or so as the market sort of started pricing in a more dovish rate cutting cycle out of the Fed is more rotation taking place. So out of tech into the broader other sectors. And what's interesting today, for example, is equal weighted S&P is now at a record high, which tells you, at least just over the last couple of weeks, leadership has not been coming from the tech space.
Absolutely.
Is this a new theme? Is that going to continue? Does it have legs?
Yeah, I think it will continue, because as we head into, let's call it the latest inning of the macroeconomic cycle, usually what that happens is also marks the peak of equity multiples. So when that happens, you do tend to see more defensive outperform, and it will pass the baton from growth towards more ROE generative, more resilient margins, more cash flow. I think it is turning towards more defensive. And you know me as well, I'm turning more bearish as the day goes by.
Let me just ask you specifically on AI and the hype around AI. There has been quite a bit of volatility in the stock, particularly around the leader in that pack, and that is NVIDIA. We're about 9 to 10% off the highs that were reached back in July for some of these AI baskets. Some people are saying that this is an opportunity to buy. Goldman Sachs analysts recommending for their investors to start thinking about putting more money into this market now and taking it as a buying opportunity.
So last month when NVIDIA results came out, I called it 2 a.m. at the AI party. And now it's looking more like 3 a.m. Because in my mind, like any party, as much as we love it, you can't go back in time. So last week, even with this short tactical rebound, I think Jensen Huang, I call him DJ Jensen now, is because he spun another track in giving some numbers about what the ROI could be if you buy his GPUs. But the truth is, what marks a cycle is really the peaking of sales momentum. In NVIDIA's case, that was first quarter this year. On global semis, it's actually third quarter now. So if you join me in believing in that, what tends to happen when you have a drawdown is it lasts more than a year, and it could be on average 40%. In the case of a dot-com bubble, it was down 84% peak to trough. So if you ask me, it's more and more looking like the latter, meaning when it happens is it's a structural shift. With the dot-com, what happened was we shifted to internet, which lasted much longer, but the stocks had to come down because it just takes time for forecasts to turn into reality. Just like I believe in this AI as structural growth, but it just takes time for it to happen.
Given the concentration of the U.S. equity markets into the Magnificent Seven and into these tech stocks, is it possible for a rally to continue with those parts of the market underperforming or seeing a significant pullback? Is it not going to just drag down everything with it?
I think it becomes a game of relative outperformance, but on an absolute basis, I think the momentum has peaked, together with all the Fed cut that we talked about in the beginning with the late economic cycle and growth slowdown. You just need things to be more defensive and focus on defensive margins and resilience of the business.
Yeah. Okay, that's a good place to leave it. Britney Lam, head of Long-Short Equities at Magellan Capital. Thank you so much for joining us today on the show. Well, still ahead, more from my exclusive interview with Iraq's Prime Minister. We discuss the nation's economy and oil production. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Intel shares jump in late trading after the chipmaker announced a new partnership with Amazon's AWS. Intel and AWS will co-invest in a custom semiconductor for AI computing known as a fabric chip in a multi-year, multi-billion-dollar collaboration. The chipmaker also announced it is postponing new factories in Germany and Poland, but remains committed to its U.S. expansion in Arizona, New Mexico, Oregon, and Ohio. Amazon CEO Andy Jassy is moving to streamline the world's largest online retailer and cloud computing company. The firm is cutting management layers and ordering employees to return to the office 5 days a week beginning in January. Jassy announced the shakeup in a memo to employees on Monday and says Amazon wants to operate like the world's largest startup. And Microsoft has unveiled a new $60 billion stock buyback program, matching its largest ever repurchase authorization. Microsoft says shareholders will also receive a quarterly dividend of 83 cents a share, compared with the current 75 cents from November. The share repurchase agreement replaces the buyback program announced in 2021. And Boeing is freezing hiring to preserve cash as the playmaker prepares for a drawn-out strike by workers. The firm is also implementing a range of cost-cutting measures, including temporary furloughs and cutting supplier spending. Workers had earlier rejected a proposal that would have boosted wages by 25% over 4 years. And a quick look at futures as we head into the European session. A bit of a roller coaster ride for equities in Wall Street yesterday. S&P futures leaning towards the red, somewhat of a negative handover from Asia. Euro Stoxx futures, though, seeing opening up in the green. We'll have more in just a moment. But also coming up, Iraq's Prime Minister reaffirms his nation's commitment to OPEC. More from my exclusive conversation with Mohamed Shia Al-Sudani. That is next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. In an exclusive interview with Iraq's Prime Minister Mohamed Shia Al-Sudani, he tells me of the ambitions he has for Iraq's economy, oil production, as well as the geopolitical challenges in the region. As Wall Street gears up for this week's Federal Reserve decision, traders seem split on how big the Fed's rate cut might be. And shipping giant Maersk is heading to court, fighting concessions and the expansion of sub-Saharan Africa's biggest container port. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's get you up to speed on these markets. And as we were just speaking about, investors still split on whether the Fed is going to go for 25 or 50 this week, though in the last couple of days, with recently a lot more dovish commentary coming out from former Fed officials, including the likes of Bill Dudley, the market has started to move closer towards 50. We've got about 43 basis points priced in for tomorrow. Yesterday, S&P managed to eke out a small gain. It was a bit of an up and down session. Today, we're pointing to about 8 basis points lower. But again, we're still very close to those all-time highs. 2-year Treasuries, 3.55 is where we're at, flat on the day. But of course, traders are pricing more and more in terms of the easing cycle. There's more than 120 basis points of rate cuts now priced in by the end of this year. The USD sitting at the lowest level we've seen since January. So again, some weakness coming through there, especially versus the yen that has been on our radar. And then crude seeing a bit of a bounce. You can see Brent trading at $73 now as we continue to focus on some of the supply disruptions coming out of Libya. Doesn't feel as though a diplomatic solution is in sight, even though there are many mediators attempting to come to a solution between the Eastern and Western governments in Libya. Quickly, let's turn over and take a look at some key data also that the Fed have to bear in mind as they head into the meeting tomorrow. And that is retail sales, always a very important data point because it does tell you a lot about the health of the U.S. consumer. And so far, the numbers have been holding up. Today, the market is expecting 0.3% on that retail sales control number, which is essentially a good gauge for discretionary spending. So if that number does surprise to the downside, it might reinforce expectations of that soft landing scenario. So keep an eye out for that one later today. Okay, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio.
Yeah, Jumana, we're seeing a mixed bag in terms of Asia equities, where the likes of the Hang Seng managed to enter the lunch break with gains of about 0.5%, but the Japanese equities are the ones that have come back from a long weekend and are succumbing to weakness, about 2% down on the Topix and the Nikkei today as the yen strength has come through. And this is, of course, a day ago where it broke below the 140 level. It's given up a fair bit of that now, but you also get the sense that for Japanese equities, this is just going to be a reality that they have to come to terms with. We have our M-Life strategist, Mary Nicola, who provided this chart, and it shows you the sensitivity of the topics as well as how it reacts to the Japanese currency. That's just been climbing here. So it gives you a sense of how these issues are not going to go away, especially when you get the BOJ after 2 rate hikes this year already. It's going to stay on hold. That's anticipated on Friday, but it's also likely to give these hawkish signals, which could send the yen climbing further still against the greenback. Jumana.
Avril, thank you so much for the overview. Now, for more from my exclusive interview with Iraq's Prime Minister, Mohamed Shia Al-Sudani, the Prime Minister told me his country is fully committed to OPEC's decisions despite not adhering to quotas. During our conversation, he also discussed Iraq resuming oil exports via a pipeline to the Turkish port of Ceyhan more than a year after its closure.
Iraq is an important country in OPEC and OPEC Plus, and we coordinate with our brothers, especially our brothers in the Kingdom of Saudi Arabia. We are committed to voluntary cuts, and there were issues that the brothers understood in terms of the slight increase in production, and Iraq committed to compensating for that, and we began in August of this year. We are committed to the decisions of OPEC and OPEC Plus in a way that protects the price of oil and this balance between the interest of the producers and consumers.
You say that you will start introducing compensations. Where is that going to come from?
We started reducing the domestic production and reducing the exports in a clear way in the oil market.
Can you talk to me about the future of the pipeline from Kurdistan? It's been shut off for several months now. You've talked about the possibility of the resumption of gas going through that pipeline. Can you give us a timeline on it? And also, again, what that would do to your overall production, given what we were just talking about vis-a-vis the OPEC quotas?
Let's understand the problem with the Iraqi-Turkish oil pipeline. The export stopped from Ceyhan after the decision from the International Court in Paris over a lawsuit filed by the former Iraqi governments over exporting oil without SOMO's approval. And then we faced another problem, and that's a legal issue. And they were decisions by the federal court regarding oil contracts in Kurdistan region and the budget law that fixed the average cost of producing a barrel that doesn't surpass $8 for every barrel, whereas fixed production cost in the oil contracts of oil companies with Kurdistan region is over $26. We are now in front of two options only. We either amend the contracts, which is what the companies dealing with the Kurdistan region had rejected, or we amend the budget law, and this requires political agreement. Iraq is keen to resolve this problem. We are missing the production capacity from this strategic, important line, and we are keen on investing in existing oil and the work of the companies. There are ongoing talks with the companies and with brothers in the Kurdistan region, and we hope to reach a solution based on the legal paths that I mentioned.
Could it happen this year?
Possible.
That was my exclusive interview with the Iraqi Prime Minister Mohamed Shia Al-Sudani. Well, let's take a deep dive into Iraq's oil production. Joining us now is Raktim Katkay, who leads our Middle East energy and commodities coverage. Iraq is always going to be an interesting one to watch and to listen to because, of course, they are OPEC's second largest oil producer. And yet, in the context of these voluntary cuts that were introduced, Iraq have been serially overproducing. I didn't really get the sense from my conversation with His Excellency that they have plans to change significantly. He spoke about potential compensation, but what was your takeaway?
Okay, let's take a step back and see. So Iraq and a few other countries within OPEC Plus have been an issue for the group. They have been producing above the limits, which kind of goes against what OPEC's stated policy is of trying to defend the market and hopefully increase prices in the process. Iraq has repeatedly, and a few other countries, including Kazakhstan, have said repeatedly that they will cut production in compensation for previous overproduction. But their production at the moment still appears far above, about 300,000 barrels per day above their quota, let alone cut for previous overproduction. Now, the Prime Minister told you this week, over the weekend, that they have started compensation cuts. It's what Iraq has said previously. The market will be keeping a very close eye on whether that's actually true.
Yeah, and then, of course, the other factor to consider is this blocked Kurdistan pipeline that's been essentially shut since April or March of 2023. And I just wonder whether if oil starts reflowing from that pipeline again, if that could add just even more downside pressure to oil because it would dictate maybe another 500,000 barrels a day extra oil coming to the market.
Yeah, it would appear so, right? I mean, Iraq, which is already, like I said, overproducing, getting all these extra barrels that is flowing into global markets through that pipeline into Turkey would just add to that extra pressure. The pipeline is a bit of a complex issue because there are, like the Prime Minister said, there are some legal and financial concerns over that, including payment for compensation to companies. So at the moment, the pipeline has been shut for well over a year, and there is actually no real date on when this pipeline will resume. I'll just add that it is not in Iraq's interest, doesn't appear to be in Iraq's interest to actually start the pipeline considering their OPEC quotas.
Yeah, well, that's the thing. That's one thing to bear in mind. And then also the actual price of oil, because about 40% of the Iraqi oil budget actually goes towards paying civil servants and wages. And Ziad Dawood, our Bloomberg economist, just did some rough mathematics showing that if oil drops to, say, $55, then they can't even get the financing that's necessary to service all of these public wages. So from their perspective, it's really key that oil prices stay supported. On that front, I also asked him an existential question about why it is important for Iraq to stay in OPEC. And you heard his response there. And of course, Iraq were one of the founding members. But what do you think the setup is for OPEC cohesion as we head into December 1?
I think I think OPEC will remain the way it is. I mean, we have had some problems with not adhering to quotas with Angola, which Angola left the group a while ago. But like I said, Iraq is a founding member, and for Iraq to actually consider anything of that sort would be a massive move. Yeah. I think Iraq benefits by staying in OPEC Plus, and if not anything else, they will get a certain base price for their oil, maximizing production kind of works for them, because you're saying the economy depends so heavily on oil.
Yeah, it's still 90% hydrocarbon reliant, so that there isn't that much diversification. But what they've been trying to do is reduce gas flaring and improve their refining. Just a quick question on what is going on in Libya, because it still feels like there's disruption coming through. How many barrels is that taking off the market, and how much support do you think it's providing oil at this juncture?
Libya, about 500,000 barrels, at least 500,000 barrels of oil have come out of the market. We reported recently, I think late last week, that that exports are continuing to dip further. There is still some oil trickling out into global markets, but it is a supporting factor. We know that Libya has always been quite up and down with oil production. I think the market takes that into effect as well, but this has been a particularly long disruption. There are political issues at stake. The UN has been trying to resolve the issue. Both the rival governments are talking to each other, but there is no decision in sight yet. So we'll have to wait to see if the central bank issue, which actually started this entire process, will be resolved anytime soon.
Yeah, short term definitely does appear to be providing some support to the market. Raktim, thank you so much for coming on our show today. Raktim Katake, who leads our Middle East energy and commodities coverage. Well, coming up, shipping giant Maersk is taking South Africa's state-owned port operator to court. We have the details next. This is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Court proceedings start today between a subsidiary of Maersk and South Africa's state-owned port operator Transnet. The shipping giant is questioning the grounds on which sub-Saharan Africa's largest container port was awarded a tender. So for more on this, Africa's chief correspondent Jennifer Savazaja joins me now. Jen, good to have you with us. What is behind this court hearing? What are the arguments that are being made?
Right, Jumana, this is very fascinating. I mean, as you mentioned there, this is sub-Saharan Africa's biggest and busiest port. It sits just south of where I am in Durban, and it is called Durban Container Terminal Pier 2. And really at the heart of this dispute is what you were mentioning there. We have this Danish company, Maersk, who was not awarded this tender to help manage this port, actually arguing that the firm that ended up getting it, which is a Filipino firm called ICTSI, Maersk believes that there were no grounds for this firm to actually be awarded the tender. And they say that the decision was actually what they call not above board. And so how this moves forward is really in the hands of the court right now. For what it's worth, we did hear from ICTSI, and they say that they were the best operating partner for this strategically critical port. They say that despite the concerns around their solvency issues, they do have a robust balance sheet. But this is not an opportune time for Transnet. We've seen a number of state-owned firms here in South Africa really looking to the private sector to help revitalize their own operations. This was just one of, and the first one really for Transnet in this very critical port here in sub-Saharan Africa. So it will be really fascinating to see how this ends up playing out in terms of a lot of these international players trying to come in and manage this.
Yeah. I remember when you were here in Dubai, Jennifer, you sat down and had a conversation with DP World, and they were talking about some of the hopes they had for establishing further trade ties, particularly in South Africa. And I just wonder, given some of the legal issues that are being presented right now, what could be at stake for South Africa and its ambitions if this legal dispute continues on?
Right. Well, let me just start with what we heard from the World Bank earlier this year, Jumana. We heard the World Bank actually rating some of South African ports as the worst in the world, right? And that includes this Durban port that is at odds in this court hearing. And part of the reason is because of just the years of mismanagement. There's been vandalism issues. There's been a number of lagging performances with this port in particular, not enabling South Africa and really its export potential to live up to what it really should be. What we've seen in the past, we actually saw Transnet rail and port bottlenecks that they've seen over the past few years contribute to 7.3 billion rand in 2023 to 2024. So this could be very detrimental to an economy that really needs to be revitalized by a very important sector.
Yeah. A very important story to keep following. For South Africa, Bloomberg's chief Africa correspondent, Jennifer Sabasasha, thank you so much. Now to more from the region. A global group backed by Amazon founder Jeff Bezos is setting up a program to attract investment into South Africa's municipal power grids. The Global Energy Alliance for People and Planet says it needs $18 billion in investment to prepare for the introduction of more renewable energy. The group is set to announce a partnership with 3 co-investors as it looks to upgrade dilapidated grids as well as cut the country's dependence on coal. And the U.S. says it is fully committed to combating the spread of a lethal outbreak of Mpox in Africa to ensure it doesn't develop into a pandemic. Officials are promising an additional $35 million to support response efforts, as well as donating vaccines to the Democratic Republic of Congo. The World Health Organization declared the recent spread of the illness an international health emergency in August. And coming up, the world's largest AI center could be coming to Saudi Arabia after a tie-up between Aramco and a California-based startup. We have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Oil giant Aramco is partnering with artificial intelligence startup Groq to build a giant data center in Saudi Arabia. The kingdom is pushing to become a hub for companies running AI systems across the Middle East, Africa, and India. So for more on that story, Christine Burke, our Saudi bureau chief, joins me in the studio. Tell us about this deal with Groq. It feels like something quite significant is happening on the ground at Saudi.
Yeah, so there's been a lot of buzz around AI in Saudi Arabia as of late, and we were both at the AI summit in Riyadh last week, and we saw a number of partnerships announced there. We saw partnerships between Saudi Arabia and Microsoft, Qualcomm Technologies, Intel, IBM, even NVIDIA. And that's initially where we heard about this deal with Groq. And the reason that we're talking about this today is because we then exclusively interviewed the Groq CEO. And what we learned from that conversation was that this partnership between Groq and Aramco Digital will see Groq operate the world's largest AI inference center in Riyadh, or rather in Saudi Arabia. This also is a center that's going to be up and running before the end of this year. So we're talking about a timeline that's pretty soon. Yeah. And also, I want to say that the CEO put a possible price tag on this, saying that Aramco will be funding the facility and that it will cost, quote, in the range of 9 figures. So pretty big amount there. Yeah.
One of the issues that has come up in the context of the region's semiconductor ambitions are those geopolitical concerns. And again, the U.S. has expressed reservations about their concerns about what these chip exports, where these chip exports will eventually end up landing. How is that being factored into Saudi Arabia's discussions with some of these U.S. companies?
Well, I think at the moment we have heard some interesting reporting. As of late, we have seen other news outlets report actually that the U.S. is potentially considering lifting curbs on advanced chip exports to Saudi Arabia in particular. If you'll recall, actually earlier this year, we wrote a story saying that the U.S. was restricting exports to Middle East countries like the UAE and also Saudi Arabia, just over national security concerns, as you said. The concern that the chips would fall into the hands of China, for example, which is Saudi Arabia's top trading partner. So we can't say whether exactly those reports are true, but it's certainly a part of conversations that Saudi Arabia is having, and it was a big topic on the ground last week.
What are Saudi Arabia's broader AI ambitions? What are they trying to do?
Well, specifically, they want to be a top 15 country for artificial intelligence. They want AI to be deployed across a wide range of industries, including healthcare, education, all in the name of backing Vision 2030 diversification, right? Another key thing is that the kingdom is aiming to draw in $20 billion of investment, of AI investment by 2030. But the key thing and the point I want to make to you here, Jumana, is that when we look at the strategy for Saudi Arabia, its goal for this decade is truly just to build out AI infrastructure and to then deploy that infrastructure locally. It's not until after 2030 that the kingdom actually has ambitions to become a global player on the AI stage.
Oh, interesting. So it's an after 2030 vision.
Yep, there should be a new strategy at that point in time.
Okay, Chrissy, great to have you on, and thank you for laying it all out for us. Especially that exclusive conversation we had with Groq CEO, Christine Burke, our Saudi bureau chief. Okay, it is shaping up to be a big week for markets. Let's just get a check on how some of these key markets are trading going into that Fed meeting tomorrow. Well, not doing a lot today, but S&P is very close to all-time highs, and actually equal-weighted S&P is at a record high. So it tells you that there's been a bit of redistribution in terms of leadership as we head into Wednesday. The market is centering on moving towards a 50 basis point cut expectation. We've got more than 40 basis points priced in at this point. But again, uncertainty about what they're going to do is the highest we've seen since 2007. So bear that in mind. And then as we head into the European session, what we are seeing is a bit of green on these European boards. The Euro Stoxx futures are seen opening up 0.4% firmer. Well, that was it for our show, Horizons Middle East and Africa. I'm Jumana Versace in Dubai. We will bring you more from our exclusive interview with the Iraqi Prime Minister throughout the course of the morning. Stay with us for Daybreak Europe. This is Bloomberg.